If you're at a point where you want to take off some of that risk, you want to be a bit more passive, or you are getting a bit older already, or in the same way you cannot take the volatility, or if your portfolio size is relatively bigger already, then it would be interesting also to go the dividend investing route, as they are giving you small amounts of dividend each year as the stock price goes up. From what I've noticed, no, sumusunod din yung dividends na binibigay nila in proportion to the stocks that they're giving, so they maintain a certain dividend yield. In this video, I want to talk about what's better, capital appreciation or dividends. Those are different ways for you to be able to invest and for you to be able to make money off the stock market. And please do note na yun yung difference also, by the way, ng cryptocurrencies and forex. Cryptocurrencies and forex don't have any dividends because they're not giving you any revenue because they're not really businesses. To answer that question, I like both. I do both. It's just that mas glamorized lang talaga yung capital appreciation because that's where you see large, massive move-ups of certain asset classes and stocks, and that's where you see the likes of Dito, Boom, Zoom Up. That's where you see ASIN, that's where you see MM, and a lot of them don't have dividends. And a lot of the ones that are zooming also, primarily, they're not the ones that give you a lot of dividends as well. Para kanino yung tao na dapat capital appreciation yung binibili nila? I think these are for people that want to grow their portfolio, meaning you are at a phase, you're at a point in your investing life where you want still to make your portfolio grow bigger. You want still that you have 1 million pesos, you want it to become 2, you want it to become 4, you want it to become 8, you want it to become 10, that you want to grow the positions that you have. Primarily, I think these are for people who are younger. These are for people who have a longer runway. These are for people who have the ability to somehow invest longer and don't mind the volatility. Hindi lang siya pang trading kasi you can also be an investor but maximize capital appreciation as well. Trader ka pero hindi mo tinitingnan yung stocks mo on a minute-to-minute, hour-by-hour basis, but you're looking at it either on a day-to-day basis only or you're looking at it from a week-to-week basis only. That's also a depiction of a trader. That's also a depiction of someone who wants to earn off capital appreciation. So basically, capital appreciation is binili mo ng mas mababa, later on nag-appreciate na yung asset and you are taking profit from it. And that works, that happens regardless if you're a trader or you are also an investor. So as what I've mentioned, these are for people with longer time horizons. These are for people who their capital they think is something that's not as big yet, na gusto pa nila i-maximize yun, na gusto pa nila palakihin. And above and beyond that, I think capital appreciation are for people who, when volatility happens, they react based on it. Either volatile yung stock na binili nila, bumagsak, they cut loss. Or, ganun din, volatile yung stock na binili nila, bumagsak na malaki, they add some more. So, they react based on the movement because kung binili nila na mas mababa yung stock, then they have an opportunity to earn more as it continues to go up once again. If you are a trader, then you buy it low and your context for selling would be your technicals, meaning tama sa resistance, di nabasag, sell. Basag yung trend line, sell. MACD, moving averages are telling you to sell, sell. RSI is crossing down, you also sell. Capital appreciation pa rin yun. For investing, on the other hand, your signal to sell would be the fundamentals. Meaning, nagbago na yung fundamentals na hinawakan mo eh. You want a stock has a high revenue growth, hindi na siya high revenue growth. You sell. You look at someone whose net income is very, very sustainable, hindi na sustainable, hindi na growing, medyo mature na itsura niya, then that could be also a signal for you to sell. Or you want a company na from a PE or PB ratio perspective, mura pa siya. At that time, mahal na. Then that could be also a signal for you to sell. So please do note that there are different factors on how you determine how you make money from capital appreciation. When I was younger, that's what I really liked more eh. It was all about capital appreciation. It was all about, sige, pag nabili ko to ng piso, tapos naging 10 to, okay to. Or nabili ko to ng 10, naging 100 to, okay to. Or bibili ko to, tapos hahawakan ko to for 40 years at titingnan natin after 40 years ano yung pinaka magiging value niya. That's the whole context of capital appreciation. While I was younger, I liked it very much because it gave me the ability that time was on my side, that as time was on my side, I had the chance to make it grow, especially if I bought a good company or especially if I traded it well. When I started out, I didn't like dividend investing so much, and if you've been watching my previous videos, I've been talking about over and over and over that I started to appreciate it when I got older, because I figured out that if I will rely on capital appreciation all the time, that means the only time I make money, the only time I get to experience whatever gains, is if I sell. What if you are not yet at a position to sell? When a stock is in an uptrend, your goal also as a position trader is you want to maximize it. Selling prematurely would not allow you to maximize your gains. It defeats the purpose of going into the stock market. Please do note that in the stock market, it's not just buy low, sell high. It's also to maximize your wins. And as long as you are in a winning position, you want to be positioned in it as much as you can. If you are buying a fundamentally sound stock, it's down and it does not go the way you want it to go, you also get nothing. And I realized that if I'm just gonna rely on that, that means that the more I make, it will be heavily dependent on how I sell and how I take profits. But I don't want that, especially if I'm 50, 60, 70, 80, 90 years old. I don't want that to happen. That's why I started this mechanism where as I start earning from capital appreciation, bits and pieces of that, take it to buy stocks that would give me dividends, to buy stocks that would give me cash flow. Dividend investing basically are for people who, number one, are relatively older already, that you want to preserve the cash that you have. Meaning, okay lang sa'yo na hindi siya 1 million to 2 million to 4 million to 10 million, pero meron ka na probably 10 million, 20 million, and you just want to preserve it. Okay lang sa'yo na yung 20 million hindi siya maging 100 million, pero gusto mo yung 20 million mo, nagbibigay sa'yo ng cash flow, tapos yung 20 million mo, hindi na siya bumababa masyado. Kung bumaba man siya, it does not degrade yung pera na pumapasok sa'yo, kasi may dividends naman siya binibigay. If you're at a point where you want to take off some of that risk, you want to be a bit more passive, or you are getting a bit older already, or in the same way you cannot take the volatility, or if your portfolio size is relatively bigger already, then it would be interesting also to go the dividend investing route. Totoo naman, it does not make sense to go and invest in stocks that give dividends if you're starting out with 10,000 pesos, 20,000 pesos, 50,000 pesos, because it won't be noticeable, the dividends, in that way. But please don't get me wrong, if you want to start with dividend investing and then you want to build a base, go for it. But what I'm saying is, baka it might be better if you have 20,000, 50,000, that you focus on stocks that will give you growth. Dividend investing would be good for people who want stability, want passive income, don't want the volatility. Their base is big already, especially if you get preferred shares. Preferred shares, you will get the dividend over and over and over and over again as long as the company has the ability to pay it. Yung difference niya from common shares or even REITs is that pag natamaan mismo yung income, it's easy to slash that first as compared to the preferred shares. The preferred shares, pag hindi sila nakapagbigay this year, it gets added up to the next time that they would give you dividends as well. So may pros and cons din yung pagkuha ng preferred shares. Yung difference lang ng preferred shares though is it doesn't give you capital appreciation anymore. So ganun sa akin, meron akong mix na preferred shares, habol ko talaga dun yung recurring income na nakukuha ko from that preferred share. Plus, I also have common stocks that give me high dividend yields. And this could be your strategy also, no? A possible scenario if you are a dividend investor is buy stocks that have high dividends, but bonus pa rin na meron kayong capital appreciation. And that could also be an argument for people who want capital appreciation. If you want capital appreciation naman, then buy stocks that are growing, but even if they're growing, they're giving you small amounts of dividend. So okay lang naman yun, because as they are giving you small amounts of dividend, you know what's happening, you know what's the narrative, you know what's the possible progression there. As they are giving you small amounts of dividend, each year, as the stock price goes up, from what I've noticed, no, sumusunod din yung dividends na binibigay nila in proportion to the stocks that they're giving, so they maintain a certain dividend yield. Pwede rin yun, that if you're holding on to it, say, 10 years, 15 years already, tas pagkabili yung stock dati 10 pesos siya, ngayon 100 na, assuming they're maintaining 10% dividend, assuming 10% is very high, 10% of 10 pesos is 1 peso. But fast forward across a stretch period of time, yung 10 pesos naging 100 pesos na, 10% of 100 is 10 pesos. What's interesting about that is, when you started investing, 10 pesos lang dinagay nyo eh. Ngayon yung dividend niya 10 pesos din. So meaning, every time they give out 10 pesos per share, halos ROI ka na sa pinasok mo na investment. That's what makes it interesting and that's what makes it relatively good. as a stock market investor. So that could be a hybrid that you could do. But what I've been doing is this: separate portfolios for those who have been following me for a long time, distinct stocks that are for growth, distinct stocks that are for dividends. Pero kung yung dividend stock nagbigay sa akin ng capital appreciation, well and good. Yung growth stocks also, kung nagbigay sa akin ng dividend yon, well and good as well. I try to differentiate it for all of you. It's nice to have both, but also may pros and cons siya when you take each. If you notice it, it's not about getting the best investment out there, but it's about getting an investment that fits you. And I really believe that capital appreciation works if you know how to select areas on how to buy, whether that be fundamentals or technicals, and select areas when to sell, when to take profits, and when to also cut loss. In the same way, dividends will work if you just want that passive income and you just want cash flow, but you also need to have a trigger, no? Bakit ka bibili, bakit ka hindi bibili, bakit ka magbibenta also. In any instance, every time na you are entering the stock market, regardless if it's via capital appreciation or dividend investing, there will always come a point in time where you will have to, number one, bakit mo to binibili? Define bakit hanggang ngayon nag-hold ka pa rin, and define bakit ngayon magsisell ka na. Those are the things that are so important when you're trading the market. So again, just to recap, if you are younger, capital appreciation would be good. If you are older, dividend investing would be good. If you don't like volatility, dividend investing would be good. If you like volatility, then capital appreciation would be also good for you. If you have a larger base, then dividend investing would be good. If you're starting out and then your base, your portfolio is not as big yet, then capital appreciation would be good for you as well. So there, I hope you guys got a lot from this. Let me know, what do you like more? Comment capital appreciation if you like capital appreciation. Comment dividend investing if you like dividend investing as well. For those who want to know more about me, I have books, seminars, online seminars happening this weekend. All of that are in the description below. Check it out. We also have videos via YouTube. We have 1,800 videos already that you can consume from the comforts of your home. And it doesn't matter what you do, how you consume the content, how you learn, but what's important is you study, you learn, you use this time of your life to continually dedicate for you to learn, grow, become better, become stronger. Because at the end of the day, the more you learn, the better you will earn. The more you learn, the better investment decisions you will make. The more you learn and get the right information on how you invest, the more you can differentiate what investment will work for you, what investment is something that fits your long-term goals. Because at the end of the day, as I say this all the time, there's no such thing as a perfect investment, but there's an investment that fits you, but there's an investment that will work for you if it's done well. So that's it for now. I hope you guys got a lot from this, and if you guys are learning, appreciate it if you could press the like button, subscribe, and smash the bell so you get updated every time I come up with new content about investing. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.